we're very pleased that as of close of market today, we'll be part of the FTSE 250. So we expect to see significant inflows from the index trackers, and now it's much more easier for retail investors to buy into the stock.
Hello, you're watching Proactive. Joining me in the studio today are Stephen Marshall. He is Chairman of Cordiant Digital Infrastructure Management. Also, Andrew Yu, the Chief Financial Officer of Cordiant Digital Infrastructure Limited. Stephen, Andrew, good to have you both in here, and congratulations on another strong set of results. Stephen, could you take us through some of the highlights of the past year?
Yeah, absolutely, Steve, and thank you very much for having us. Another absolutely fantastic year by the operating companies. We've achieved a total return on NAV of 16.3%, which has increased our NAV per share to 146 pence per share. Again, another extraordinary set of results. These are driven by a growth in the revenues from the operating companies of just under 10%, in fact 9.9% growth in revenues, and a 7.8% growth in EBITDA. So fantastic results from fantastic teams of managements across our portfolio. And as a result of that result, the board has felt very comfortable in increasing the dividend in line with our progressive dividend policy, and we'll be setting that out in our detailed report later today.
So a fantastic year, Andrew, but looking beyond last year, you've been listed for 5 years now. Take us through a bit of the journey and the progress you've made over that period.
Sure. Thanks, Steve. So we're very pleased with what we have delivered for shareholders over the past 5 years. So since 2021, our IPO, we've raised and deployed £795 million across a diverse array of high-quality digital infrastructure assets. We've grown the NAV, so achieved a NAV total return of 14% per annum over the past 5 years. We've increased the dividend every year. So for this financial year, we announced a 2.3% increase in the dividend. And this has been backed by strong cash flow generation. So we've grown EBITDA significantly over that period through organic growth with new contracts with high quality customers and highly accretive bolt-on acquisitions. To top that all off, we're very pleased that as of close of market today, we'll be part of the FTSE 250. So we expect to see significant inflows from the index trackers, and now it's much more easier for retail investors to buy into the stock. Despite all of this, we're still very disappointed with the significant discount to NAV we're trading at. So you can buy our shares today on an implied EV/EBITDA multiple of around 10 times. So if you compare this to mobile tower assets, data center assets, both the private and the public sector, you're seeing multiples closer to the high teens, 20s. So this sentiment is shared by our research analysts. So if you look at recent reports from Investec and Deutsche Bank, they've carried out some of the parts analysis on the portfolio, coming out of values in excess of 160p, so far more than where the shares are trading at today. So overall, we think there are there's significant opportunities for growth in the portfolio, and we're still undervalued by many metrics.
I mean, one of the big focus areas for growth, Stephen, has been data centers. Could you take us through the progress you've made so far and what you see as the next steps?
Yeah, I mean, this is an absolutely fantastic market, Steve. Everybody sees it across both UK, Europe and North America. And across our portfolio as well, we're seeing increased demand for this asset class. When you just look at the Czech Republic, CRA has actually built out 10 edge data centers over the last 5 years, 9 of which are completely full. The last one has got some considerable interest right to lease that up. And as we've talked about before on this media, Stephen, Prague Gateway is under construction now. It's under development. That is a 26 megawatt facility being built on an old AM radio site in the outskirts of Prague. An absolutely fantastic facility. There's a lot of interest in it from both neocloud, enterprise and government. And as a result of that, the team out there are actually looking to see if they can contract more power to increase that facility up to 40 megawatts. And as you also know, and we've talked about before, we're actually partnering with the Czech government in actually to try and see if we can secure one of the grants to become an EU gigafactory. And if we were to be successful in that, of course, we would be looking to upgrade it to up to 100 megawatts. But even at the sort of the lower power sizes, based on the valuation of data centers, I mean, this facility alone is almost the same sort of value, maybe even more actually, than what we actually paid for CRA some five years ago. So a really fantastic opportunity, an exciting opportunity. And across our wider portfolio, we're looking to see whether Emitel can pursue the same sort of strategy in Poland. And in Belgium, our DCU is continuing to contract more and more power from various sources to be able to further expand its data center capacity and offering to its customers over the next 5 to 10 years. So it's a great opportunity for us.
So a great opportunity in data centers, Andrew. But looking outside of that area of the business, what other catalysts do you see for the company?
So another key focus area in terms of value creation for us is the integration of BT Ireland. So in September 2025, Speed Fibre acquired the wholesale and B2B fibre assets of BT Ireland. So BT Ireland was the number 2 player in the market. Combining that with Speed Fibre, the number 3 player, we've now created the leading competitor to the incumbent in the country. So now we have a network of just under 10,000 kilometers of fibre. And we acquired all of this for around £14 million in cash consideration. So the replacement value of that network we acquired is multiple times bigger than what we've paid in terms of cash. And with this combined network, we now have a much greater opportunity to develop a Western fibre ring in Ireland, which was previously much more difficult for us to do. But the key near-term focus for us is EBITDA creation through this integration. So we've been undertaking headcount optimization, creating some network operating efficiencies, consolidating the property and the infrastructure portfolio, and reducing low margin services. So this should create sustained operating margin increases and efficiencies for the company, and we're very excited about this prospect going forward. In terms of other opportunities in the portfolio, so we're actively looking to grow Emitel's mobile tower portfolio. So currently we have a portfolio of around just under 800 towers. We're aiming for closer to 1,500 towers over the next few years. So this will be underpinned by the long-term contract we have with Orange in Poland through build to suit. And we have the opportunity there to add other MNOs to those towers. Other opportunities lie in 5G broadcast, developing emergency warning systems, and growing the smart cities portfolio of both CRA and Emitel.
So really lots of opportunities lying ahead. Congratulations again on another strong set of results. Stephen, anything you'd like to add?
Well, I'd just like to thank investors, right, for the support over the last 5 years. We did create this actually to give investors the opportunity to invest across the digital infrastructure space, mobile telecommunication towers, data centers, and fiber optics, and that is, as we've talked about already, both today and previously, that has actually, I guess, outperformed our expectations in terms of growth in NAV, in terms of our ability to drive dividend growth. So very, very pleased with that. And it's almost intuitive, Steve. I mean, we've talked about this before, haven't we? That the demand across that digital infrastructure network is forever growing. Right? We use more and more mobile capacity. We work from home, we work from offices, we work remotely, right, over fiber. And both that access over mobile or fiber is going to data centers, which demands more and more servers in order to be able to support our requirements. And we've all, heard we can't open a paper now. We can't open our laptops without hearing more about AI, right? In terms of not only asking for information from the internet, but asking it to compute certain questions and answer certain questions from the internet. And we're all doing more and more of that, which of course drives more and more demand in the data centers, more and more capacity over the fiber, more and more capacity needed over the mobile operators. So demand for our assets continually grows, which of course helps to give the wind at our backs in terms of growing revenues, EBITDA, and cash flows and profitability. So very pleased with that. We've heard recently from Andrew that, of course, we've moved to the main market. We've been told we're going to be included in the FTSE 250, and moving to the main market means that retail investors have much easier access to our stock than they previously did whilst we were on the specialist fund section, where they had to sort of take a sophisticated investor questionnaire. So much easier access now to the retail investors that we wanted to support right from the beginning. So we're very, very pleased that we can do that now. So thank you very much. Thank you very much for all the investors that have supported us from the get-go, for the investors that have come in since then and supported us along the line. We see lots and lots more opportunities. We see lots and lots more growth potential across the portfolio, and we'll continue to work hard and support that growth for investors well into the future. So thank you very much for seeing us again, Stephen.
Well, gents, thank you both very much for coming in again. Great to see you both.
Thank you.
Stephen Marshall, he is the chairman of Cordiant Digital Infrastructure Management. Also Andrew Yu, CFO of Cordiant Digital Infrastructure Limited.